Did you know that your down payment isn't all that you need to bring to the closing table when you're buying your home? Whether you're buying your very first house or whether you're on your fifth house, you've probably heard the term closing costs. It's one of those terms that gets tossed around a lot and it can offer a lot of confusion. In fact, one of the most popular questions that I get as a real estate agent is, what exactly are closing costs? While a great lender is going to explain that and they're going to explain what is included in your closing costs, it's easy to still wonder how much you should plan for. So stick around, because in the next few minutes, I'm going to break it all down in a way that makes sense, and hopefully you'll be able to understand and walk away from this video really understanding what closing costs are, and you'll feel a lot more confident and prepared for when it's time to close on your home. I'm going to even answer another really popular question that I get: who pays for them? So grab your notebook, get a little comfy, and let's break this down together. By the way, I'm Anita Cordell, and I make videos about all things Kansas City, what it's like to work here, play here, live here, sleep here, and I even talk about the weather here in the Midwest. I am also the team lead of the Yellow Brick Group, and we help people just like you buy, sell, relocate, and invest right here in our amazing city. Why? Because there's no place like home. As we are talking about the closing costs, I want you to also understand that there are 5 different main costs in purchasing a home. The first one is your down payment. Now, you as a buyer pay this unless you qualify for a loan where there is no down payment. So one example is that the state of Missouri has what's called an MHDC loan. And if you qualify for this loan, then it waives all of the down payments. There's no down payments included. There's also no down payment included in a VA loan. And I am such an advocate for VA buyers. In fact, it is a great benefit, in my opinion, for our military to use this benefit. And so if you are a veteran and you want to purchase a home, no matter your location, wherever you are at, even if you are not in the Kansas City area, then I can help you get connected to agents across the country, especially if you are using a VA loan. But I just wanted to share with you that I advocate and thank you for your service when it comes to veterans. Now, for those of you who qualify for a 0 money down loan, your down payment amount is going to be 0, obviously. But for those who do not qualify for one of those 0 money down programs, your down payment is going to depend on the type of loan that you qualify for or that you choose to use. And of course, there are some people who do not want to pay PMI. They'll put more than 20% down so that they don't get charged the PMI. Also, too, when you're in bigger loans, like if your property is over the jumbo loan amount, then some people will actually put more money down so that they don't have to have a jumbo loan. So the amount of money that you bring to closing regarding your down payment is going to depend on what you qualify for and the type of loan that you get. And obviously, if you choose to pay cash for your home, you won't have this down payment. The second category of monies that you will need in order to consider purchasing a home is the inspection costs. And those costs range anywhere between $350 all the way up to $1,200 depending on the style or the type of inspections that you do. So there's whole house inspection, there's termites, there's radon, there's sewer scopes depending on the age of your home, there's water tank inspections, there's surveys, there's soil inspections, there's all kinds of inspections that you can choose to do. And also too, you can opt to not do them, which is something that I don't recommend, but the inspection cost is the second category of fees that you're going to want to have saved. And then there's the earnest money deposit, and this money is amount of money that both the seller and you as a buyer agree upon to put down for kind of a security deposit. I always explain it, it's kind of like a layaway where you put down this and it goes into the title company's escrow account, and it's what's agreed upon on the purchase agreement once it's signed. My advice when I'm speaking with buyers is to put down 1% of the purchase price. That's usually a good amount, but it is a negotiable amount and it is agreed upon between you and the seller. Then the fourth cost involved in purchasing a home or selling a home is just the miscellaneous costs. In a buyer's standpoint, other costs would be like utility deposits or a moving truck fee. Things like that I lump into a miscellaneous charge, and of course pizza on moving day when you have your friends over. And then when it comes to sellers, obviously miscellaneous fees such as their moving costs or moving trucks, and of course pizza as well. And they have their own closing costs as well. Now let's talk about closing costs. What are they? So closing costs are fees and expenses that you pay when you finalize a real estate transaction. So whether you are buying a home or you're selling a home, you are going to have closing costs. Closing costs are often underestimated by especially first-time home buyers because they haven't bought a home before, they don't understand a lot of what's going on, and so it's kind of a little bit of a new term for them. And some first-time home buyers may not even realize that there are ways that can decrease these expenses, which is why it's so important to have a real estate agent and help along the way. So while these closing costs can be negotiated, they do not include the down payment. So some people are a little confused about that, but just so you know, they're two separate fees that you will pay when you are getting ready to close on your home. So keep in mind that your ability to negotiate these fees can be significantly impacted and influenced by the type of market that you are in when you're trying to purchase a home, such as whether or not it's a buyer's market or whether or not it's a seller's market. So for instance, if we're in a seller's market and you are wanting the seller to pay, say, $8,000 of your closing costs, that's not necessarily going to be as easy as if you were in a buyer's market and there's all kinds of homes to choose from and the seller is really needing their home sold. You might have a little bit more negotiating power when it comes to buying in a buyer's market versus a seller's market. It's also going to depend on the type of loan that you are doing, and sometimes sellers are really eager to pay a lot and sometimes they're a little tighter in their budget, and so there's a lot of factors that are included in how you can negotiate that. And in Kansas City, the typical closing costs include lender fees. Lender fees are also called origination fees or underwriting fees, and this covers actually the cost of processing the loan for you. Then you've got appraisal fee. This is when the lender will order an appraiser to come out to make sure that your property holds its value based upon the loan that you are getting. Another fee that's in the closing costs is your credit report. This is usually anywhere between $100 all the way up to $300 depending on the lender and what they pull into that credit report fee. And it's basically a charge that is pulling your credit along with other processing fees along with that. Then there's underwriting and processing fees on top of that, and it's paid to the lender to evaluate your loan and to manage all of the paperwork. The next fee I want to talk about is the homeowner's insurance fee. Now this homeowner's insurance is usually required by the lender to upfront pay that for a full entire year. And the rough estimate for the cost is usually around $600 annually for about a $100,000 home. That may be a little on the high side, but you can shop around for insurance providers and see if you can get a discount for even putting your cars underneath the same policy, or there might be some other incentives along the way. So be sure and reach out if you are needing assistance in getting some options for some quotes. Then there's also the escrow and title fees. These are charged directly from the title company, from managing the money and the documents in the transaction. Now in Kansas City, we use title companies. In other cities and in other states, they're called attorney states. That means that the attorneys are the ones that actually will manage the entire transaction and the paperwork. They don't have title companies. Here in Kansas City we do, which is why there are some title fees that are associated with our closing statements here in our real estate transactions. Then there's also the real estate commission. There's prorated taxes, which are also prepaids. There's prepaid interest, and then there's also private mortgage insurance. Now, private mortgage insurance is something that you would have to do if your down payment is less than 20%. This is required by the lender, and it's called PMI. Basically, PMI protects the lender in case you default on the loan payments. Now, on top of those basic closing costs, there are some optional closing costs that show up. You can actually choose to have something called discount points. These are from the lender. They're mortgage discount points, which are usually equal to 1% of your loan amount. And what it does is it allows you to buy down your interest rates, and it can save you money in the long haul on interest over the life of the loan. And lenders will allow you to pay for these points up front when you're closing on the loan. There's also flood insurance. Now, I will tell you this, that it is very rare for a property here in Kansas City to require flood insurance, and it's kind of expensive. If you are concerned about this, then please check with your Kansas City real estate agent, aka me, to help you verify whether or not flood insurance is needed on specific properties. Then there's also the HOA transfer fee. This is if your property is in a neighborhood that has a homeowners association, then transferring that homeowners association coverage to your home, to the new buyer, sometimes will fall on you. Then there's also another optional fee called a notary fee. So that's only required if you are needing a notary to help you sign that. So say you are out of state or in a different location on the day of closing and you are needing to sign remotely, then I have a person who actually has access to notaries all across the country and will get you those signatures that are needed to obtain a notary for you. So that's another added fee. It's not necessarily needed, especially if you are in town and you are able to make it to the closing table here in person. Now, this can apply for sellers as well. If you are selling your property and you live in another state, then we can arrange for a mobile notary to come to your location and sign those papers so that you can properly sell the home. Now, the closing statements or the closing costs for sellers include, if you agree to pay for any of the buyer's closing costs, also real estate commission, title fees, owner policy fees, wiring fees, service fees, and any other prorated fees that you have, like prorated HOA fees. So think of closing costs as like your supporting cast that's behind the scenes making this movie and making it all come to life. The closing costs are working in conjunction with the down payment, and they're more supporting the help of the real estate transaction, all coming together legally and financially. So the question is, how much are closing costs, and how do I estimate what these closing costs are going to be? So typically you can expect anywhere between 2% all the way up to 6% of your home's purchase as the part of the closing costs. That's a pretty big range, right? I know, but let's break it down. So say for instance, in a $500,000 home, that could be anywhere between $10,000 all the way up to $30,000 in your closing costs to purchase that home. Now, there is a loan estimation form. It's an LE. Be sure and ask your lender to give you a loan estimation document or a closing disclosure that will come at the very end. And these two documents will outline those fees so that you can see the details and help you move forward in what your estimation will be. Now, I know that I said a wide range, on a $500,000 home. Is it $10,000 or is it $30,000? That's a lot of money to figure out. So here is what impacts your closing costs. First of all, it's going to depend on what type of loan you have. So whether it's an FHA, a VA, a conventional, or any kind of loan program that you have that might inhibit the closing costs one way or the other. So say for instance, you are using an FHA loan, and your loan origination fee is $1,500. So let's break down the numbers here. Using a $500,000 home, your loan origination fee on an FHA loan might be around a $1,500 fee. And then there's going to be an upfront mortgage insurance premium, and that's usually about 1.75%, which would be about $8,700, which is rolled into the loan oftentimes. Then there's underwriting and processing fees, which are about another $1,200. Then there's credit reports and flood insurance, which would be a couple of more $100. So if you were looking at a conventional loan, the origination origination fee might be $1,000 to $1,500. The underwriting fee might be about $750. Then the processing fee might be about $500, and the credit report and processing fee of that might be anywhere between $50 to $100. Now, if you're going to use a VA loan, there is zero down, but there is an actual funding fee. So the origination fee is anywhere between $0 to $1,000. It depends on the lender. So you're gonna have to look and ask your lender if you wanna use this loan. And then that VA funding fee is 2.15% of first-time home buyer users. And it usually is gonna be around the $10,750, and it's often financed with the loan. And then there's a credit report and other processing fees of about $100. So when it comes to closing costs, every single lender structures their fees slightly different. So always ask for a loan estimation fee and always ask questions. And of course, you can ask me for some vetted lender options for you, and you can apply to those lenders as well. But always remember, you're gonna have your closing costs, your down payment, and then also too, any lender credits or points that you might get are also going to be included into the closing costs. And then another factor that does impact the closing cost amount is going to be included in your specific home and location. So even a neighborhood could actually be a little more because the taxes might be higher in this specific area, and also whether or not they have HOAs and how much those HOA fees are. So like say for instance, you are gonna buy a condominium or a townhome that's got monthly HOA fees, then your closing costs are going to be a little bit more than what they would be if you were going to purchase a property out on some land with no HOA at all. So it's everything, there's so many factors that are included in how much your closing costs are going to be. So the way that I work is if there is a home, just reach out and I will help you with this process. But once you get pre-approved, then your lender should offer this service, and they should offer the service that if you see a property that you really like, then give them a call or shoot them a text, the address, and then they can run the numbers to help you figure out and estimate what those closing cost amounts are going to be so that you're not caught off guard. And of course, your Kansas City real estate agent, AKA me, can get you some great vetted lenders. So whether it's in 9 days or in a year, I've got you covered. Just give me a call. In fact, my contact information is in the description below, and there is included a link that goes right to my calendar. We can set up an appointment and start talking about your real estate goals, even if it's not until a year. All right, so now let's talk about the prorated taxes and interest on your loan. And this is where things get a little mathy, so stick with me and hopefully this will clear up a little bit of the confusion when it comes to closing cost fees. So let's talk about property tax and the proration of property tax. So here in Kansas City, taxes are paid in arrears, meaning that the seller will pay for the time that they lived in the property during that calendar year. So say for example, the annual taxes are $5,000 and the closing date is September 15th. So the seller is going to owe the taxes from January 1 to September 15th, and that would be $3,750. And all of that is going to be credited to you at closing. Now, as far as prepaid interest is concerned, interest is paid from the closing date to the very end of the month. So if you close, say, on April 10th, you're gonna owe 20 days of interest. On a $500,000 loan at 6.5% interest, that is a daily interest of about $89 a day. So 20 days at $89 is $1,780. And that would be added to your closing costs. So then there's homeowner's insurance, and you're typically going to prepay the homeowner's insurance 1 year at closing. And let's just say your annual premium example is say $1,800. That is going to also be included in on your closing costs. And then there's what's called escrow. Escrow is something that the lender sets up. And to establish your escrow account, your lender is going to collect some of the money for the purchase agreement, and they're going to collect it in the closing costs amount. So say they're going to collect taxes. Usually they will collect 3 months of taxes to put into this escrow account. So there's another $1,250. And then they're going to collect another 2 months of insurance, which is about $300. So that's a total of about $1,550 that is added to this escrow account at closing. So all in all, there's a lot of things that go into the amount of closing costs that are going to be specific to that property. So it's going to depend on the type of loan that you have. It's going to depend on whether or not you're trying to get rid of PMI and if you put down more money. It's going to depend on how much you put down, even if you don't put down that 20%. It's also going to depend on actual physical location of the home. It's going to depend on whether or not you need flood insurance, how much the insurance is going to be required for that specific property, and the age of the home, all these things. So there's a lot of things that go into how much your closing costs are going to be. Now, here's the fun part. Negotiating closing costs. Here's some really good news. Closing costs are negotiable in so many cases across the board. You're probably asking, how are they negotiable? Well, let me tell you. Ask a seller to pay for some of those closing costs in the contract. Especially, it's very, very common actually for especially first-time home buyers to ask for the seller to pay for some of their closing costs, especially if the market is slower. Now, I mentioned before that if you're in a seller's market, it can sometimes be a little trickier and a little harder to get that seller to pay for some of those closing costs versus if you are in a buyer's market and you have all kinds of choices. I've had buyers say, okay, I like these two houses and let's feel out the seller to see if they would be willing to pay for some of my closing costs. And if one of them doesn't have any interest in paying it and they're really tight on their funds, a buyer might go to another property so that they can get some of their closing costs paid for. Another way that you can get your closing costs decreased a little bit is to request for lender credits. And these will slightly raise your interest rate, but they'll reduce the upfront cost of how much you need to bring to the closing table. And then obviously you can shop around for lenders as well as title companies because rates and fees may vary. And your Kansas City realtor can help you build an offer strategy, aka me. I can help you build an offer strategy so that you can win the bid. To make your home purchase more affordable, you can negotiate with the seller to cover some of that portion of the closing costs if they are willing and if they can pay for some of those. When we're talking about asking the seller can contribute towards closing costs, but there is a limitation to it, and it depends on several factors like the type of loan that you're getting, when you're getting occupancy, and how much your down payment is. It is your prerogative to shop around and ask a lot of questions to lenders. So ask your Kansas City real estate agent to help negotiate on your behalf. And that way the seller can pay for some of those costs for you. So, are you ready to buy a home? Now, speaking of buying a home, on the day of closing, you are going to be asked to bring some things on that day. Just quickly, you're going to need your photo ID. You're going to need your certified funds. So another popular question that I ask is, how do I bring the closing? So say you got your seller paying $5,000 of your closing costs and you still owe another $7,000 in your closing costs plus whatever down payment you're putting on. You do not want to bring a check. Don't bring a check because the title company will not accept it. You can either have your bank wire those funds to the title company, or you can go to your bank and have them print out and give you a certified check to take to closing. Full disclosure, I am not a lender. I'm just giving you some basic estimations and examples. And there you have it, an in-depth look at real closing costs for buyers in Kansas City. So whether you are using a VA loan, an FHA loan, a conventional loan, whether you put down the bare minimum or zero, all the way up to more than 20%, you now have some tools to estimate what you will need for the closing day and what you're doing on the day that you sign all the paperwork. So don't forget, like this video, subscribe for more buyer tips, as well as drop your questions in the comments below, and make sure that you look at the description, because that is where my contact information will be. And whether it's 9 days or a year, be sure and click on that calendar link and let's talk about your real estate goals, because I would love to be your guide from offer to closing.